And those are some of the company stories we're watching this hour. I'm Charlie Pelletin. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week. More coming up in just a moment. First up, though, a check on world and national news off to our 99.1 newsroom in the nation's capital, and Nancy Lyons. Hey, Nance.
Thanks, Carol. President Biden says he does intend to speak with his counterpart, Chinese President Xi Jinping, to diffuse tensions over the U.S. military downing of an alleged Chinese spy balloon.
This episode underscores the importance of maintaining open lines of communication between our diplomats and our military professionals. Our diplomats will be engaging further, and I will remain in communication with President Xi.
Biden says the U.S. seeks competition with China, not conflict. He also says there is no evidence that the 3 other unidentified objects recently shot down were involved in surveillance. Well, we're learning more about a Georgia grand jury that's been investigating 2020 election interference. Bloomberg Washington correspondent Joe Matthew has more about a report released today.
Only portions of the report were released, showing a majority of the grand jury believes perjury may have been committed by one or more witnesses testifying in this case. They did not name names, but they could include some big ones. Trump lawyers Rudy Giuliani and John Eastman both testified, as did Senator Lindsey Graham and Georgia Governor Brian Kemp.
Bloomberg's Joe Matthews says now the Fulton County District Attorney will need to decide whether to present its case to a regular grand jury, which could recommend indictments. Michigan officials say the 5 students who were injured in a campus shooting at Michigan State University remain in critical condition, but they are improving. 3 other students were killed. MSU's interim police chief, Chris Rosman, says the shooter had 2 handguns on him and additional ammunition.
We can also confirm that a note was found on the shooter, and the location that the shooter was located was roughly 3.8 miles northwest of campus.
Chief Rosman did not reveal what was in that note. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Carolyn Madison.
All right, Nancy, thank you so much. Bloomberg Business Week, it is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. There is more pandemic relief available to claim for small and medium-sized businesses. The ERC is a refundable payroll tax credit your business may qualify for, even if it has already received PPP. Let the tax professionals at Innovation Refund show you how to get the money your business may be eligible to receive with no upfront costs. Get more information at refunds.com.
Well, February is Black History Month, and every day this month we are celebrating significant moments in U.S. Black history. So now with your installment for Thursday, February 16th, here is our own Justin Milliner. Hey, Justin.
Hey, Maddie. Thank you very much. On this day in Black history in 1923, groundbreaking singer Bessie Smith made her first recordings, including this one, Downhearted Blues. Known as the Empress of the Blues, Bessie Smith's recording of that song, Downhearted Blues, was one of the first recordings to be included in the National Recording Registry by the National Recording Preservation Board. And when it came out, it had an immediate impact, selling over 500,000 copies in its first week. She spent her early career in tent shows and bars throughout the South before a talent agent heard her perform and gave her a deal with with Columbia Records.
It could happen.
It could happen, Bloomberg Records. Maybe that's an idea. It launched a successful recording career for her. She took advantage of radio's growing popularity as well, making live appearances at stations across the country, and she tackled social issues through her music. Music scholars today see her work as an early form of African-American protest music, and that is today in Black history.
It is indeed, and I think it's corporate calling saying they do want to expand
Right?
the business.
Oh, look at that.
Listen, I love, we know music can really change what's going on and really attack some really important social issues, so important to hear her connection with that as well.
Absolutely.
Justin, thank you so much. All right, folks, time to head over to our TV colleagues, talk about the markets, because countdown to the close starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go here on this Thursday afternoon trading session. Romaine Bostic alongside Katie Greifeld, joined right now by Carol Masser and Madison Mills. Welcome to our audiences across Bloomberg Television, Bloomberg Radio, and Bloomberg Originals, as well as for those folks streaming on YouTube. Carol Masser,
Yes.
before we get to the broader market, which remains on the back foot, some headlines crossing the wire right now for our folks here in New York regarding JFK and an outage at one of its main terminals, Terminal 1 there in JFK, that is now affecting all inbound and outbound flights.
It's a little troubling considering the spate of headlines I feel like we've seen over the last month or two when it comes to various airports. And we know in the New York Metro, it's a very congested area, so we'll continue to monitor. Having said that, speaking of monitoring, I've been watching kind of the hospitality leisure area of the equity markets. And if you pull up the S&P Super Composite Hotels, Restaurants, and Leisure Industry Index, for those who are listening on radio, and that index is up about 1.7% here. It's up about 5% in the past 4 days. So we've seen investors moving into this area. We know we've been hearing from earnings. Airbnb, we know this one's been on a tear, guys, up almost 30% in the past 4 days, up another 4% today. Morgan Stanley raising its price target to 100. The stock you can see at 142. So sounds like they need to play a little catch up.
I do think it's interesting.
Don't you think that's interesting?
But with TripAdvisor down and the downgrade that we saw
Trips
a little
down
bit
9.5% today.
Yeah, and I think it's interesting, though, that the disconnect that we're seeing, because remember, we saw softness with some of the other booking companies, right? So kind of the intermediaries. But it seems like the hotels and the airlines themselves are doing pretty well.
We should point out Bernstein cutting its rating and price target on Trip. But I think, Romaine, this goes to that larger topic we've been talking about. Investors are looking at each company differently because the fundamentals, the metrics aren't all the same, even if there's several companies in an industry. All right, Maddie, what do you got?
Well, I want to zero in on housing data coming off of this morning's news because we know that mortgage rates going much higher in recent months, and that is having an effect on housing starts, down 3.4% in December, down another 4.5% in January. How much of that is weather versus mortgage rates? Because we had that bad weather in the east and west. We don't really know yet. But I should mention also building permits up by 0.1% in January. Home builder stocks going up because we're building a lot, even if new home sales are starting to fall off. Construction is strong, commodities are high. So it's really interesting to see, Romaine, these housing starts just starting to drop off for the fifth month in a row.
Let's get back to the broader market here. 41.27 right now on the S&P 500, down about 0.5%, and that's pretty much the story across the board for the Dow as well as the Nasdaq, the Russell 2000, the relative outperformer. It is unchanged on the day, and we should point out mid-caps S&P 400 actually in the green, up about 0.1%.
Well, there's a lot of red numbers there. If you look at the sector level, it's the same picture. All 11 sectors in the S&P 500 are lower right now. That's being led by consumer discretionary stocks, down about 0.7%. Pretty much the same picture. The relative outperformer today is real estate, funnily enough, but still down about 0.2%.
Yeah, I think one of the big outperformers, actually, you have to kind of go down a little bit in the spectrum here, but community health shares just having a phenomenal day, up 54% right now. This is going to be their best day on record as a public company, going all the way back to 2000 here. And this gets to I think what we've been talking about, Carol, over the last few days, the idea that people really are buying the most beaten down stocks. And if you do get a beat out of some of those beaten down stocks, and then for some people, that's enough of a green light to rush back in. Meanwhile, yesterday we did talk about Cisco and that not only the earnings beat, but more importantly, the guidance that they gave for a revenue forecast that could potentially get into the double digits on a full year basis. Those shares up 6%. Paramount Global, though, going in the opposite direction, down 3%. And keep an eye on Tesla. This is kind of interesting unfolding story here involving a recall for about 362,000 vehicles. This is related to the self-driving system. This is a recall in the U.S. by the Highway Traffic Safety Administration. They, I believe it or not, set the definition of a recall. Elon Musk doesn't think this is a recall. Tesla shares down 2%.
Yeah, market, though, maybe thinking there might be a little bit to be concerned about.
Are you trading Bitcoin today?
I am not. I can't do that. I work for Bloomberg.
Anyway, it's back to 25,000 mainly, but what I think is important here, a quick chart for those folks looking here, that 55-week moving average, which it broke below last year, it's actually flirting with that right now.
Yeah, interesting. All right. I love technicals. I love technicals. I love Fed speak, and I feel like the Fed conversation got a little bit more expensive, a little bit more interesting, maybe a little bit more expensive for some investors. And this is thanks to the president of the Cleveland Fed. We're talking about Loretta Mester, who talked about maybe a compelling case for rolling out another 50 basis points hike earlier this month. So she's talking about the meeting that just happened. Here's what she had to say specifically.
At this juncture, the incoming data have not changed my view that we will need to bring the Fed funds rate above 5% and hold it there for some time. Indeed, at our meeting 2 weeks ago, setting aside what financial market participants expected us to do, I saw a compelling economic case for a 50 basis point increase, which would have brought the top of the target range to 5%.
All right, that, of course, is Loretta Mester, president of the Cleveland Fed, and basically saying that the Fed needs to be prepared to move interest rates higher because of inflation concerns. We've heard this mantra before.
Well, and we're hearing it again right now. St. Louis Fed President James Bullard speaking to reporters crossing the wire right now, saying he advocated for a 50 basis point rate increase at the last meeting, and he says he wouldn't rule out supporting a 50 basis point hike at the March meeting here. So you basically now have at least two Fed members that have publicly said that 50 was on the table. They did consider it, and at least Bullard now saying that he's willing to put that back on the table when they meet in a couple of weeks' time.
Markets move quickly, for sure, but just think about where we were a month ago. I mean, we were thinking maybe February, the most optimistic case out there was the final hike. Now you look at, perhaps 50 basis points becoming a possibility again. I think a lot of people assumed that from 25 we were going to hold, and then the next move from that would be a rate cut.
Where'd that cut go?
It's not priced into 2023 anymore.
And when does it end, right? Does it end in July? Does it end in August? What is the end of this here?
Listen, haven't you heard there's no landing here?
It's getting very,
keep going.
We're just, until the plane runs out of gas. A few people pointed that out to me on Twitter.
Can we get one? Okay.
Well, as Mike McKee said to us at the top of our broadcast, he said inflation's stickier than we all thought. The economy and the growth that we're seeing in the economy also stronger than we all thought. So it's just not playing out like we thought. What?
Yeah, we'll catch up with you a little bit later.
All right.
I do have a question.
Hold that point.
Deep
okay.
tease.
We will be back. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals, Romaine 2, Beyond the Bell. We'll count you down to the close at 4 p.m. Wall Street time.
This is ourselves under pressure. Under pressure.
All right, folks, I have to say earlier today when our producer Paul Brennan and our team, Maddie and all of us were putting the show together, we realized that there really was, in a large way, a theme of geopolitical tensions. We talked a little bit about a Chinese invasion of Taiwan, what it would mean for just a possible scenario in terms of chips to the UK specifically. We had the president talk about objects in the sky, but getting ready to hopefully meet with President Xi. A lot going on. We've seen China and the U.S. go back and forth with sanctions. So we wanted to check in and get a view on this. And we have a perfect guest to do that, and especially when it comes to concerns about, possible escalating military tensions. So let's head to Colorado Springs, and that's where we find retired U.S. Air Force Lieutenant General David Deptula. He's now advisory board member at Academy Securities, and he is with us via Zoom from Colorado Springs. General, thank you so much for being with us here at Bloomberg. There is a lot going on. U.S.-China, how do you kind of gauge the tensions that are out there and where it could possibly go?
Well, first, thanks very much for having me on. What I'd tell you is a very uncertain period of time right now. If you take a look at what's happened with respect to the Chinese spy craft that entered the United States and was eventually shot down, and the development of the U.S. government's understanding of the Chinese military goals and some of the new details that are coming out, they really reveal some misreadings of the U.S.'s reaction by Chinese officials. And that indicates just how difficult it is for the United States and China to discern each other's intentions. And quite frankly, the challenge there is that gap could lead to greater mistrust and or miscalculation. So we're still trying to figure out what's going on. There are some people that believe that in all actuality, the balloon went off course. But then again, the Chinese officials and balloon operators appeared to make a series of bad decisions. So there's still a lot going on that the U.S. government still doesn't understand, and we've got to figure it out before we move. But the other thing this all points to is we've got to have better communication at the senior-most levels between our two countries.
Well, and I will say, I thought the most notable thing of President Biden's comments earlier were that he does plan to reach out to President Xi. So it wasn't like that was a stop. What, in terms of that Chinese balloon, what is it that, as the president said, they're still kind of figuring stuff out and what it was all about? What development or what known information could come out that would make you a little concerned?
Well, I'll be frank with you. Of more concern than whatever the balloon might have collected, it's the uncertainty, if you will, and the indecision that emanated from the Pentagon and the White House that was evidenced as the Chinese balloon entered the United States airspace. It was pretty clear that the administration didn't have an answer for that kind of a problem. And we still don't know if the Secretary of Defense actually notified the president when the spy craft originally entered Alaskan airspace, or not until it entered the continental United States. Now, last week, to their credit, the Pentagon and the White House acted more rapidly, and clearly they were more prepared, and the president was notified in a timely manner. But the point that I would like to make with you or leave with you is the issue was not necessarily whatever intelligence could have been extracted by the balloon. It's the policy decision not to have shot it down once it was in U.S. airspace.
Well, and also potentially the lack of information about what's already in our airspace. When President Biden was speaking, he mentioned 3 action items, and the first one was just to establish a better inventory of what's going on in our own aerospace. Does that concern you at all, us kind of not having enough knowledge about our what's already up there?
And do you buy a recalibration of the radars?
An absolutely wonderful question. Let me offer, if I may, and I know time's of essence here, but sometimes these things are a bit complicated, but the North American Air Defense Command, or NORAD, was originally designed to detect and then defend North America from a catastrophic attack from the Soviet Union. And then back after 9/11, they had an additional role to intercept and identify and redirect any unknown aircraft or unidentified aircraft heading toward restricted airspace. So the NORAD radars are tuned to detect aircraft or missiles that meet that criteria. And balloons, at least until recently, generally don't fit that category. So in order to track both, will require modernization of NORAD's current radars, as well as additional radars, and quite frankly, a reversal in the decline of the resources that have been allocated to NORAD. Look, NORAD gets its aircraft from the Air Force, but our Air Force today is the oldest and the smallest it's ever been in its history. So just like the Air Force, NORAD's been underfunded and allowed to atrophy over the past 30 years. It's still employing Cold War era technology. Just to give you and your audience an example, in 1960, NORAD had about 2,000 aircraft under its command, and today they've got about 30 at any one time. So these intrusions ought to be a wake-up call to rebuild our air and space defenses.
So your perspective is that basically what this revealed is that our air and space defenses have some major holes, no pun intended, but that's the bottom line, at least from your perspective.
Absolutely.
So, okay. So having said that, that's one issue. And then, of course, there is, though, the way it kind of played out and just was a reminder of kind of the tensions that already existed between the United States and China. How do you see that relationship that has been a complicated one from the get-go? How do you see it where businesses still want that exposure? We know that, and yet we know it's a very tricky one.
Well, I think, you know, to the president's credit, he made the point that, look, we want to compete with China. We don't want to engage in a conflict with China. And I think what you'll see is a redoubling of efforts out of the State Department, the Department of Defense, and the White House to assure that there is greater connectivity at the senior-most levels to be able to rapidly discuss and put some of these issues that may result in misinterpretation or miscommunication to bed. And so while there are lots of different avenues to explore with respect to what happened here, I think this has been a wake-up call for both the leadership of the United States as well as China, that we can't allow misunderstandings to get out of hand if, in fact,
We might be
That's
losing
okay.
you a little bit, but
Yeah, we've been
really
listening.
interesting point that he's been making, Carol.
We've been talking to retired U.S. Air Force Lieutenant General David Deptula. He is on the advisory board, and he is an advisory board member over at Academy Securities, and he's been talking with us from Colorado Springs. But it's interesting, obviously a military perspective, but talking about the potential, at least in his view, that there wasn't the correct spending or upgrading, if you will, in terms of the protections and the defense systems that are needed to protect our space, basically, in our aerospace.
Which is really interesting and in some ways alarming given some of the geopolitical tensions that we're facing globally right now. I was really curious to get his thoughts on a look ahead because we know that Blinken potentially meeting with Wang Yi in Munich later this week. I wonder what someone like him, Lieutenant General David Deptula, would be looking for out of that meeting. What would a clue be to indicate where U.S.-China relations are heading?
General Deptula, I know we've gotten our connection back. We've got about a minute or so left here. So there are said to be meetings with the Secretary of the United States, State Secretary, I should say, Antony Blinken, coming up between he and Chinese officials. What is it that you kind of keep on your radar when it comes to those kinds of meetings?
Well, I apologize that the connection dropped off there, but what I was about to say, or was in the midst of saying, is that if anything good comes out of this particular incident, it's the fact that at senior levels, at the Secretary of State level, Secretary of Defense level, in discussions with their counterparts in China, they've got to develop more rapid means of being able to communicate to dampen down and explain different perspectives when these kinds of situations arise. Furthermore, I think the president was spot on when he articulated the message to the Chinese that they're going to need to stop these kinds of intrusions with respect to blatant disregard for U.S. airspace, whether it be over Alaska, the continental United States, Guam, or Hawaii. So those are a couple of issues that I think could move us toward an era where there's greater communication and understanding, not less.
All right, we're going to leave it on that, and hopefully we can catch up with you real soon. David Deptula, he is, of course, U.S. Air Force Lieutenant General, retired. He's an advisory board member over at Academy Securities. I am tongue-twisted on this Thursday, joining us via Zoom from Colorado Springs. But I do feel like anything U.S.-China, really pivotal and obviously one of our main geopolitical issues going forward.
Absolutely. It's critical to watch.
All right, you are listening and watching Bloomberg Business Week. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. Do want to begin with the developing story. A power outage at JFK International Airport in New York is impacting flights. The airport on Twitter says the outage at Terminal 1 is impacting both inbound and outbound planes. According to FlightAware.com, about 110 flights in and out of JFK were delayed as of 3:15 p.m. Now, let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. Stocks with a late fade here as Bullard says he would not rule out supporting a 50 basis point hike in March. Dow's back down 300 points. S&P's dropped 43, and NASDAQ is lower by 1.3%. The U.S. 10-year yield at 3.84%. Gold is up 7. Oil is little changed. And Bitcoin is higher by 2.9%. Among the main 11 S&P sectors, all were trading in the red, led by losses in utilities and consumer discretionary. And leaders to the upside in the Dow, Cisco and Home Depot, while Disney and Microsoft led to the downside. And speaking of Bitcoin, it topped 25,000 intraday. And wrapping things up, some of the names reporting after the bell tonight include Applied Materials and DoorDash. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week on this Thursday. Carol Massar along with Madison Mills. And one story that's been garnering some attention today, Maddie, it's among our most read. It is about how the fattest profits in 70 years may be coming to an end, and that won't be good for the labor market. So let's get to our reporter.
Absolutely. With more on her story here, we've got Bloomberg News U.S. economy reporter Katya Dmitrieva. I hope I said that right, Katya. I apologize if I didn't. With us from our Bloomberg 99.1 studio in Washington, D.C. Hey, Katya, thank you so much for being here to chat with us about this fantastic story. Talk to me a little bit about the big takeaway here. Is this a sign that the disinflation is being stickier than the recent data suggests, or what is your biggest takeaway for us?
Well, I think the big takeaway here, Madison, is just how much trickier it is this time to gauge exactly the connection between profit margins and payrolls, because usually it's a pretty easy mathematical equation. You start seeing company profit margins narrow, they're going to be looking for ways to cut costs, and usually that means labor. Labor is a big chunk of those costs, and what does that mean? That usually translates to layoffs coming down the pipeline. But it's a very different situation this time, where you have profit margins still at these multi-decade highs, and even though they've come down, they're still at these levels that are pretty much unprecedented. And at the same time, as we saw in the January payrolls report, we have a really robust labor market. I mean, just bigger, running hotter than any other economist had expected, with more than 500,000 jobs gained in the month. So you have a hot labor market, you have demand for labor still really strong, and you have profit margins that are sort of coming off of the peak, but they're still relatively high. And so that direct connection is kind of trickier to unpack. But clearly, if you're listening to Bloomberg Intelligence, we cited Gina from there, our chief equity strategist, and her take was, it's not about the level, it's about the trajectory. So in other words, yes, those profit margins are still high, but what matters is that they're going down. And going down, we know historically what that's meant is job cuts.
I love this story. And we love Gina Martin Adams, too, because she's talked a lot, Katya, about profit margins. She's been focusing on it and that trend line. And you're right. This is where, when you're trying to think about what happens next, and we can, talk about Fed policy and try to dissect everything that the Fed speakers say. But when you get down to numbers, you just think about, all right, if margins, yep, they're still profitable, these companies, but not as profitable as they were before. You just got to think about balance sheets, right? And what companies have to do. They're going to have to cut costs. And ultimately, it gets to labor.
Absolutely, and I think it's also interesting because today we got PPI, which accelerated more than expected, and that comes off the back of CPI, so consumer prices that were also hotter than expected on the annual after the adjustments and the weight changes. So you have a picture increasingly, I think, in recent weeks, and really just the past week alone, that shows you that the economy is running a lot hotter than people think, and in fact, these projections of profit margins potentially narrowing, we might not even see that. So that's, again, another question mark. You know, traditionally, maybe companies would cut jobs, as we're seeing technology firms doing. We've had over 100,000 layoffs since November in the tech sector, including big companies like Amazon. But does that necessarily mean that we're going to see every single company do that? Well, maybe not, because if the consumer is happy, if retailers are still selling, if inflation is accelerating or reaccelerating, rekindling, whatever we want to call it, then that's a very different picture.
Well, Katya, one of the things that we've talked about with companies is labor hoarding, right? And this is the one thing that if the downturn is, if we even get there, if it's a soft landing, if it's a soft landing without the landing, like a company might be more inclined to hold on to workers, especially in what is still a tight labor market, rather than let a worker go, because that means having to hire, having to bring someone in, train them, that's lost productivity and lost time.
Absolutely, and companies have this trauma. Of course, workers do because they were laid off.
Yeah,
yeah, they've got PTSD from the post-recession period where there were these mass layoffs, and especially for skilled workers, you're going out, you're trying to find them. Well, too bad. They found some other industry to work in, or somewhere to work in where they have higher wages. So I think that experience has, at least for the companies I've been speaking with, and especially manufacturing and anything to do with engineering or chips manufacturing, semiconductors, all of these employers are telling me we still cannot find the labor. And so some companies are hiring, and they're kind of, they call it putting people on the bench. So they're kind of maybe hiring them part-time, or they're keeping them on payroll, even though normally business conditions have slowed to a point where they might have to lay them off. But this time they're keeping them because they think that we're going to do sort of a soft landing, a little bit of a recession, but then pop right back up. And they want to have the workers for that.
So companies don't like the idea of profit margins peaking, obviously. I wonder, in the conversations that you have with companies, what do they say about what their tactic might be to maintain these high profit margins, if not doing layoffs? Like, what's another tactic they might employ if they're really wanting to hold on to their workers?
And Katya just got about 20 seconds.
Yeah, I think you don't have much choice. You either, I think the margins will be sacrificed a little bit, at least, again, with the companies, industries I've spoken with. You're going to sacrifice just a bit of your margin in order to hold on to good people. And so we might see that in pockets of the economy.
All right, Katya, I really appreciate it. An important story and among our most read on the Bloomberg today. Bloomberg News U.S. economy reporter Katya Dmitrieva joining us from our Bloomberg 99.1 studio in Washington, D.C. Well, earlier today, GM Chair and CEO Mary Barra at a conference talking about how EVs can have better profits than today's cars. So we've been kind of keeping an eye on this name because while in town, Mary Barra stopped by our Bloomberg offices, and she's getting ready to sit down with Bloomberg's David Weston to talk about the company's business. The stock, by the way, up about 28% so far in 2023. Here's David with Mary Barra.
Television, radio, and YouTube audiences worldwide. I'm David Weston. I'm delighted to say that I have with me now for an exclusive interview General Motors Chair and CEO Mary Barra. Mary, thank you so much for being with us.
It's great to be here.
So electric vehicles, of course, is the topic, without a doubt. You've really plotted a very, I think, ambitious path forward for General Motors. And you're financing it, and it's a lot to finance out of your existing business. Tell us how that's going. I know you had a really good year last year. Where are you on your plans to be able to finance that huge investment you're making out of your current business?
Well, I think our internal combustion engine business is doing quite well, and I really think we've got the best lineup of products that we've had in a very, very long time, and we just keep making it better and better. But right now, we just did a major refresh on our full-size trucks, which is the Chevrolet Silverado, the GMC Sierra. We have a brand new heavy-duty Sierra and Silverado coming out. We also have brand new mid-size trucks coming out. That's the Colorado, the Chevy Colorado, and the GMC Canyon, and that's just the truck portfolio. We've got also, I'm really excited, we have a Chevrolet Trax. Now, this is an entry-level vehicle. It is affordable, has great safety technology, great connectivity, and it's around $20,000. And this vehicle is a lot of fun to drive, great fuel efficiency. So when I look at our portfolio of internal combustion engines, I'm really excited about it, and they're doing well. The customers are responding. I mean, we still see very strong demand for our trucks, our full-size SUVs, the Chevrolet Suburban and Tahoe, the GMC Yukon, and the Escalade. Again, we can't build enough of them. And so I'm excited about the demand. The customers are really responding. And that kind of response, and especially when they want to buy up-level models, is really what is giving us the ability to generate the profitability. We had strong profitability last year that allows us to continue to invest from an EV perspective.
It's a big year for General Motors, and you have a lot of electric vehicle models coming out as well, adding to a portfolio. You talked about the higher level, more expensive ones, and you sort of started there really with Lyriq and some of the more expensive ones. How important is it for you to fill in all the different price points so you can reach the full range of potential consumers?
It's critically important if we want to achieve goals to get to 40, 50, and beyond, a percentage of all new vehicles sold to be electric vehicles. You have to get into that 30, 40, 45 range, because that's where the bulk of the market is. And so that's why I'm so proud of the Chevrolet Equinox and the Chevrolet Blazer, both EVs that are coming out this year. The Equinox will be around $30,000, and the Blazer will be in that 40, 45. And those are very affordable vehicles, and best that they're loaded with technology, safety technology, connectivity. And I think the performance of those vehicles are just going to surprise and delight our customers. And because it's in the sweet spot of the market, we think there's going to be a huge opportunity to sell a lot of them.
You are in investment mode. You're putting tens of billions of dollars into electric vehicles, and yet you've really pledged you're going to maintain margins to the best of your ability. You have to do that in part by costs. And I wonder, any business I've ever seen, you're always spending too much in some places and too little in others. As you look forward to the future of General Motors, where do you think you need to spend more? Where do you think you need to spend less?
Well, I think any part of the business can be made more efficient. Even the areas when you're growing, you can still look at how do I grow efficiently. One of the things I always tell the team is, I want you to be scrappy. Pretend it's your own money and it's your last dollar. How are you going to spend it? And getting that kind of creativity, I think that's when people do their best work. And so, clearly we're optimizing our internal combustion business, but making sure we're giving the customer everything they want and more, surprise and delighting them. But we found that we can do that with a lot less complexity. For instance, I mentioned the Chevrolet Trax that will have one engine. And so, that allows us to do the vehicle in a very efficient manner, but still meet the customer needs. But we've also found that, through COVID, we found we could take cost out, reduce bureaucracy, and now we've got to, continue to get at that. And that's why we announced with earnings, even though it was record earnings, we announced that and committed to take $2 billion out of structural cost between 23 and 24, and I know the team can do it.
You're getting, it appears, a little bit of help from the government in the form of what's called the Inflation Reduction Act, with certain tax credits, not just for vehicles, but also for mining of some of the lithium and things like that. How important is that to the margins for General Motors in your electric vehicle project?
Well, I think when you look at IRA, what was intended to do is accelerate EVs and also bring a lot of the work, the supply chain to the United States. And I think it's accomplishing just that. We were already... but it can be a significant piece. But we're really, because we have such strong ambitions, and I think we've got the portfolio to do that. We have a portfolio of companies that we're working with. That's a very important partnership, but we have several, and we'll continue to work with many people in the industry, especially in lithium and the other critical minerals.
Well, what about those critical minerals? Are you going to make similar deals for other critical minerals for the batteries you have to manufacture?
Well, in many cases, we already have. I think we've got 9 or 10 deals that we've already announced, and we're not just focused on, I'll say traditional sourcing. In some cases, we've done JVs. In other cases, we've done equity arrangements. Some are strategic supply agreements. So we really are looking, because there's a lot of issue of will there be enough supply and what will the cost be, and we want to make sure we have a portfolio solution. So I think we'll be positioned to have a competitive advantage.
General Motors has a substantial presence in China. It's been an important part of your strategy overall. How critical is China to the success of your EV strategy?
Well, we think China's a very important market. It's about anticipated it'll be somewhere around 23, 24 million units this year. But we think China has the opportunity to grow to, north of 30 million units. And we have a strong brand recognition from Cadillac and from Buick. Right now we're focused on launching some electric vehicle, a nice portfolio of electric vehicles there that we think are going to be, exactly what the consumer wants. So this is an important year for us in China. And we're going to continue to do that. We have Lyric in both countries. Several of the products will be in both countries. And so we're looking to see a recovery there and really focus on meeting what that customer wants when it looks for an EV.
Predictability is so important in business. U.S.-China relations have not always been predictable in recent times, even today, with some of the talks about these things being shot down, whatever they are. What is the risk for General Motors in your strategy in China from some of the geopolitics, the relations between the United States and China?
We try to focus on what we control and ensuring that we've got the right product portfolio and we're serving the customer well. Clearly, we have stated that we think if we can agree to have a level playing field and both countries are going to compete, we think that will, serve both economies well. But, those are decisions that we don't make. And so we're just working to make sure we have a strong business there and continue to build on the strong product portfolio and the brands that we have there.
Mary, we all focus on electric vehicles, which is the way these things are propelled. But you've always said it's not just the way they're propelled. It's also connectivity. It's sharing. It's other things like that. Where are we on autonomy? One of the things you've pursued. Cruise, obviously, looks like it was a very good investment. Mm-hmm. But how big is that going to get?
Well, Cruise, I think, is an incredibly significant technology, and I couldn't be more proud of the team led by Kyle Vogt, who is the not only the co-founder, but the chief technology officer and the CEO. And, the team demonstrated last year we were the first company in this country to be able to, charge for a ride. We continue to do that. We've now taken our technology, and in about 90 days, we were able to show that we could get it up and running, albeit small scale, in Austin. And we had already been doing some work in Phoenix, so we're in 3 markets now. So we think we've shown that the technology can go to another city, and we can scale it rather quickly. So this is an important year, and we'll have more to say, but I couldn't be more proud of the team. And I really think autonomy, whether it's in rideshare, whether it helps in delivery, but also personal autonomous vehicles are really going to change the way we move, especially as we get to now for rideshare and delivery, and then a later part of the decade as we look at what it can do for personal autonomous vehicles.
You've also talked about the connectivity and the extent to which a car will no longer be just something that you use to get around places. It's going to be something much more than that. You're connected with it. Where are you on that, and how much of that's being developed in-house for GM as opposed to outside?
Well, what we call it is the software-defined vehicle. I almost think what's happening to the vehicle from a software perspective is even more profound than from how the vehicle's propelled from an EV perspective. We started in 2019 rolling out what we call our Vehicle Intelligent Platform, which gave us the capability to do over-the-air updates to virtually the entire vehicle. With the Lyric, we're rolling out our Ultify platform that even allows us to do much more quickly, personalization, allowing you to, on-demand Super Cruise. And those are just some of the features and things that we're looking at. So I think there's a huge opportunity to continue to build on that and really just, make the vehicle even better. Because one of the things, right now, when you buy a vehicle, it's at its highest value. Our whole thing is your vehicle just gets better over time with what we can download or what you can upgrade.
You've said you'll go back into Europe. You sold the European operation. I dare say you hadn't made a lot of money off of it for some time. You sold it, but now you're going to go back in with electric vehicles over there. Are you going to build them in Europe as well? Because typically you've said you want to build where you sell.
Well, as we start the business in Europe, we will look, and it will largely be, we'll be importing vehicles. But, I think we have a well-defined strategy. We'll start in certain countries. We have our plan for distribution. And so I'm excited about what we're doing. So stay tuned on the announcements.
What's your comparative advantage? There are a few other European car manufacturers, last time I checked. You got some competition there. So when you go in, and I go in and I can decide which electric vehicle I want, why do I pick General Motors over some of the established European brands?
Well, I think one of the things is the electric vehicles we're going to offer. And by the way, we're there now with iconic Cadillacs and Corvettes and Camaros. So, people know some of those very iconic Chevrolets and Cadillacs. But we're going to go in with an offering that has incredible performance, incredible range, and is beautifully styled. And I think we'll win based on the merits of the vehicle.
So, Mary, 2023 is going to be a very big year for General Motors. Take me forward to December 31, 2023. What will we know about General Motors and your strategy at the end of this year that we might not know now? You may anticipate, but we don't know it.
Well, just by the fact that we're going to have 9 EVs available for sale in the United States alone, covering critical segments like we talked about, and with the Chevrolet Equinox EV, the Chevrolet Blazer EV, a luxury vehicle that's affordable. The Lyriq that starts around $60,000. The Silverado, which really is a capable work truck complementing what we've done with Hummer. The portfolio that we have that covers key segments, I think, is going to be very important. So to show the strength of the portfolio, people will say, I get it. I think what we're going to be able to see from an autonomous perspective and how Cruise will continue to grow and scale this year, I think those who think autonomy is years away will recognize it's right here, right now. So those are 2 things I know people will say by 2031.
One last question, Mary. Those of us who don't work for an automotive company tend to say, well, they're automotive companies. And let's talk about the horse race. General versus Ford or versus Toyota or versus Mercedes, whatever. What are we missing? What is special about General Motors in your view?
Well, there's a lot, so we could talk for the next hour about that, David. But, I think the fact that we invested in a platform, so the EVs that we're going to be launching that I've talked about come off a dedicated platform, so there's no compromise. I think the fact that we have the leading autonomous vehicle company, I think, is a true advantage. And frankly, the fact we have a system where we've already transformed. We took 92 weeks out of our development process to do our electric vehicles. We've reduced complexity. We've maintained and improved quality. There's so many dimensions that this is a year that we will clearly demonstrate and pull away from what people consider traditional OEMs.
Mary Barra, thank you so much for spending so much of your time. It's really appreciated. That is General Motors Chair and CEO, Mary Barra. And now back to you.
All right, David Weston, thank you so much. Again, Bloomberg's David Weston with the chairman and CEO of General Motors, Mary Barra, our simulcast. One of the headlines, GM needs to sell $30,000 EVs to reach the bulk of buyers. So really talking about reaching the masses. Shares of GM, by the way, little changed at this hour. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds to see if your small to medium-sized business qualifies for a payroll tax refund. If your business was impacted by the pandemic, this is your opportunity to take control of your business's future. Learn more at getrefunds.com. This is
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got just about 12 minutes left, a little bit under, more like 11 minutes left in today's session. A lot going on. Watching the trade here, just a quick update for you because stocks pretty much at their lows of the session. What does that mean? The S&P is down 1.2%. The Dow Jones Industrial Average, we're looking at a decline of 1%. NASDAQ taking the biggest hit on a percentage basis, down about 1.5%. Quick check on the Treasury trade because we've seen yields certainly popping up on some of that hot economic news. 10-year note with a yield of 3.86 and it is just off its highs of the day's 2-year note, most sensitive to Fed policy with a yield of 4.64 off its highs of the days. So let's get to it. Our market guest, Ken Van Leeuwen, CEO and founder of the wealth management firm Van Leeuwen and Company, joining us via Zoom from Princeton, New Jersey. Ken, good to have you back with us. How are you?
Well, thank you. Thanks for having me. Nice to be here.
Well, a lot going on this week. Maddie and I try to keep on top of it. A lot of economic news and a lot of Fed speak. Give us your macro take on this environment and what it means for investment plays right now.
Well, it's really interesting, Carol, because what we're seeing, of course, is that, of course, today's comment about PPI indicates we think that the economy is stronger than what was anticipated. You know, we've gotten some pretty strong economic numbers the last 2 weeks, especially Tuesday's number and employment number. So we think the Fed, and that's what's kind of pushing the market down today, right? Bullard came out and said that basically he thinks in March that we're going to have to raise again by another 0.5 point rather than these 1/4 point hikes that we just went through. So again, the Fed has its mandate to control inflation, and it looks like they're going to be doing that. So that's what's pushing rates up, of course, and the market's down today.
Ken, I want to ask you a totally wild and random question here. I know that you just wrote a little piece about how meeting with prospective clients can be like a blind date. Can you give me some of your advice? What would you tell clients to ask you if they were on a blind date with you?
Well, first of all, I'd want them to ask me about my experience, right? Like, what have you done? How long have you been doing this? Of course, I have some gray hair, so they can tell I've been doing this for a while. So I'd ask them about that. I'd ask them about that. I'd ask me, have they ever, you know, I'd want them to explain their situation a little bit and say, have you ever worked with individuals like myself?
Yeah.
And can you give me some solutions to solve that? And then I'd want to say, you know, how are you qualified? I mean, what kind of designations do you have? What makes you so special? Why are you good at what you do? You know, I would also want to ask, how do I get paid? I mean, which is the ultimate question. Sure. So, yeah, but it's a great thing going on these dates, actually. It's one of the best parts of my business that I really enjoy.
Well, it's important, especially because retail investors, obviously, we know by now they're here to stay. What is your single biggest piece of advice for retail investors today, given the macroeconomic headwinds we're facing? What would you tell a retail investor to watch out for?
Well, a couple things to watch out for is that I worry about, you know, chasing a trend. Okay. Like, I think one of the things is that, of course, earlier in the week, we all about AI, everybody was piling into Microsoft and shunning Google. While I think that Microsoft is a great company, did it deserve the price increases that it got earlier in the week? I'm not sure of that, right?
Why is that? Can I stick with you on that for a second? Why is that with Microsoft?
Well, what's happening there a little bit, I think what you're just saying is that's because that's the next revolution. And I think investors still want the next best thing. They're still chasing that illusion. Well, it's not an illusion, but they're still chasing, you know, a big winner. Because, you know, we had big winners in 2021 and 2020. Last year, not so much. But people still want that big growth stock that's going to go up 5-10 times.
So is Microsoft something you would commit some new money to because of the AI play and the ChatGPT play?
We own it currently, so we would continue to hold it, but we wouldn't chase it right now, because I think there was a news report actually today that it was creating some kind of unseemly conversations when people would put requests into Bing. So, you know, that's kind of, it still has to be perfected. I think it's a long way from being there.
All right, Intel, let's stay with the tech space for you, Will. We know we've got AMAT reporting in the semi space after the closing bell. What is it about Intel specifically, which feels like it's been struggling for some time to kind of make some headway and kind of get itself on a new trajectory?
See, one of the things that I think an overall theme of what we like is strong dividend payers. Intel with a dividend yield over 5%, and, you know, clearly they've struggled lately. They've lost, actually, ground positioning to AMD.
Right.
But they're still a tremendous brand. And, long term, in our belief is that brands win out. That's why we like that Intel. They've got a lot of work to do. They're building these new factories in Ohio, but the dividend is really what is appealing to us.
Let me follow on that, Ken, because our story on the Bloomberg by our Ian King and Ryan Vlastelica talks about how Intel is among those that the street seems to be saying is prime for a dividend cut, because I think at the current rate, Morgan has put out there and some other analysts, at the current rate, Intel's dividend projected to cost more than $6 billion this year, and that the company's got to focus on heavy spending, needed to kind of regain its manufacturing leadership, and that as a result, they'll have to cut shareholder payouts. So does that still make it interesting for you?
It still makes it interesting because what we've seen in the past, right? Because I think it's the overall health of the company for Intel. Yes, the dividend right now at this rate could potentially be cut, but I'd still a buyer here at its low valuation. Remember, it's only selling at 10 times, which is a historically low valuation for Intel, to be sure.
And that's kind of your view on selective tech names. I want to go over to the consumer discretionary side because that's the fun side from my perspective.
Yes, that's a great side.
Talk to me about, let's go to Ulta Beauty because they've got a big competitor with Sephora and obviously a lot of other big players in the beauty space. Why do you like Ulta?
Well, first of all, we like Ulta because it's a tremendously well-managed store chain. They've got many great things. Now I think they're introducing where you can even get your hair done, your nails done, things of that nature there in the different stores. Also, I think their long-term goals of expanding in China is something that's very, very appealing to us. And frankly, the CEO, we think, is one of the best retailing CEOs in the country right now.
Can I ask why?
Why? Just look at the growth that she has delivered to her shareholders. So I think that in a tough environment, right, when we saw basically she came through COVID, she performed well last year and is continuing to show us this year what they can do.
Just got about 30 seconds left here. In terms of the semi space, you do, since AMAT's reporting, just quickly 30 seconds, on semi you like, why that name?
Because that's the semis in terms of the digital experience and the ability to it's the semiconductor chip that basically can follow you around basically, and with all that basically in cameras and all those different things right now, that semiconductor space is one of the few areas that's growing right now, and ON is one of the leaders, and they're a U.S. based company, and they manufacture here in the U.S.
All right.
So that's why we like that one.
Gonna leave it on that note. Ken, thank you so much. Be well. Ken Van Leeuwen, founder and chief executive officer of Van Leeuwen and Company via Zoom from Princeton, New Jersey. Folks, we've got stocks pretty much at their lows of the session. We're gonna head over to our TV team, talk about the markets, because Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic and Katie Greifeld here, counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with Carol Massar and Madison Mills. Welcome to our audiences across Bloomberg Television, radio, as well as on Originals, and those folks streaming on YouTube. Carol, last time we checked in with you, we had a market that was on the back foot, but it has significantly deteriorated.
Yeah.
Stocks around the lows of the day, about 80% of the S&P 500 right now in the red.
Yeah, I call it the Mustard-Bullard two-punch, if you will, because it just seems those two Fed members, they're not voting members. They'll participate in the deliberations of policymakers this year. They are among the more hawkish Fed policymakers, but to keep consistently talk about this half-point rate hike when we've gotten down to 25 basis points based on the last Fed moves, I think it's just making some nervousness come back into the market. See you, Maddie.
And it's also coming on the heels of some bad data for the markets earlier today, right? We've got warnings from U.S. producer prices rebounding in January by the most since June. U.S. home construction retreating for the 5th month in January. Those elevated mortgage rates just continuing along. Katie, I wonder about these jobs numbers as well. It's like a pick your poison question for the Fed of which data point is the worst news.
It seems like you add it all together, though, and to that point, it all seems inflationary. And, you know, if you're Jerome Powell, you don't love to see that, especially after the most historically aggressive tightening campaign over the past year or so.
Yeah, and we talk about the cross-asset moves, modest moves in the Treasury market, but that sell-off continues for yet another day, both on the short end and the long end of the curve. The VIX perking back up about 2 points today and back above that 20 level that a lot of people pay attention to. And as you hear the bells and the clapping here in New York, as the equity markets wrap up the day, it is red across the screen. Dow Jones Industrial Average down 1.3%. The S&P 500 down 1.4%, below 41,000, we should point out. The NASDAQ Composite back below 12,000, down more than 200. Yeah, we should point out, this is Lisa Cook. She wasn't monetary policy.
It's certainly been an issue that they have talked about.
All right, well, going back to the markets, let's talk about the industry groups because it is just red across the board here. All 24 groups negative right now. Your relative outperformer, this isn't something we talk about a lot. This is the commercial and professional services group, still lower though. And then you look down at the bottom, it's autos, it's chips, autos, of course, being led lower by Tesla, Carol.
All right, let's get to some of the gainers in today's session, and Cisco certainly among them. We talked about it last night after the closing bell, of course, reporting its earnings, top of the S&P 500 and the NASDAQ 100. We've talked about it last night. Today, Romaine mentioned it earlier. It really was about the outlook, the company raising its full-year forecast, very much a bullish sign when it comes to the spend, the corporate spend on tech infrastructure.
Can I just say, Carol, because we were kind of perplexed about the forecast and how strong it was.
Yeah.
And we had Woo Jin Ho from Bloomberg Intelligence on.
We did too, yeah.
He actually talked about how a big component of this actually was the recurring revenue and the gains that they've been making on that side, and that might be the way that they actually meet those targets.
Well, he talked a lot about the backlog, right?
Yes,
and this had to play with the supply chains, and so their backlog has been really extensive, and that was one of the things I know that he was looking for more clarity on. So nonetheless, investors still pleased remain at this point. So they did send that stock up about 5% in today's session. Another one, you talked about this earlier, Community Health, ticker is CYH, soaring up, as you can see, about 52% here. It's a hospital operator, beat consensus expectations for the fourth quarter adjusted EPS, gave adjusted EBITDA guidance for this year that an analyst said helped lift sentiment. I think it's its best day as a publicly held company. And then Crocs, this one also for you, remain up about 4.5%. Coming out adjusted EPS for 2023, that forecast beat the average analyst estimate. The CEO said consumer demand has been exceptional. Stock is up about 24% so far this year.
All right, some earnings crossing the wire. Applied Materials reporting earnings right now. The 1Q numbers actually coming in. The net sales at $6.7 billion and change here. That appears to be relatively in line with what the street was looking for at $6.69. Adjusted EPS at $2.03 a share. Street estimate was coming in at $1.94 on average. And here's your forecast going forward here for the second quarter, the fiscal second quarter. Net sales, it's guiding to about $6.4 billion. The street on average have been looking for 6.3. So overall on the top and the bottom line, and it appears to be a bit of a beat for both the most recent quarter as well as the guidance going forward.
All right, and we're also getting earnings breaking from Redfin. Let's see, the first quarter revenue forecast beat estimates. They see first quarter revenue coming in around $307 million to $324 million. The estimate had been all the way down at $276 million. That seems to be boosting the stock. After hours now unchanged, even though the fourth quarter loss per share was much greater than expected at 57 cents versus the expectation of 27 cents. And also you saw the first quarter net loss about $105 million to $116 million. The estimated loss had been for $66.5 million.
Well, I'm going to go into some of the decliners that we've got from today. I had an embarrassment of riches to choose from, but I'm going to start off with Shopify. Shares down by a little over 14% right now. Steepest intraday decline for Shopify since July. That's coming off of weaker than expected profit outlooks during earnings, but analysts saying they're still positive on the company. They think the worst is behind them on that, so still pretty bullish on Shopify. And I know we've been talking about it all day over here, but Paramount Global brutal. Those shares down by, I want to just check and make sure, a little over 4% right now. It was down by 8% earlier today.
Yeah.
That's after the media company
Did
reported.
you see they raised the prices on the streaming already? What's going on?
But they've got the subscriptions are still so strong on the streaming side, Romaine, right? We've got just a little under 10 million. I mean, that's huge, those numbers.
It's just legacy television dragging us down.
Wonderful. Everything old is new again.
It's that ad revenue, right? And then I think you're going to like this one, Romaine. Okay, Microsoft cooling off, correcting those big gains earlier in the week. We had Ken Van Leeuwen on our show telling us that that was investors chasing a big winner. But, you know, we've all been talking about ChatGPT. I'm sure you've seen the headlines that ChatGPT giving
No, I haven't heard of this. What is it?
Well, ChatGPT is giving what some would call unhinged responses to folks who've asked to see, you know, where can I go see Avatar 2? ChatGPT is saying that 2022 is the year. Crazy stuff.
And I'll just add one more to Toast, of course, a big payment platform for restaurants, down 23%, worst day on record. And I only bring that up because we are going to get DoorDash a little bit later here in the day. I do want to bring you some breaking news. This on Visa, we're now learning that the vice chair and the CFO of the company, Vijant Prabhu, is apparently going to leave. He is departing the company and will be departing on September 30th. So once again, the vice chair and CFO of Visa going to be departing the company on September 30th. Katie.
Well, I want to pivot back to Redfin because I think this is a really interesting stock market story. Of course, as we talk about the housing market, Redfin shares, I was running the numbers before the bell, up 114% year to date, of course, adding 6% in the after hours now after beating on revenue. It's interesting to me that if you look at the analysts who cover the stock, none of them are buy ratings, and yet, I mean, it's just been an incredible rally for Redfin.
Hey, got one more earnings to throw on to it, and DoorDash, as we were just talking about. And let's get right to the outlook. Talking about 2023 gross order value, $60 billion to $63 billion, and that's the high end, certainly beating the estimate of the street, which is $61.32 billion. So the company seeing profit growth as customers in general keep ordering takeout. So take a look at DoorDash, man, on a tear, up 12% in the after hours. That stock already up 37% this year.
I was talking a little bit earlier before the show with Mandeep Singh at Bloomberg Intelligence because he's been keeping an eye on Dash, and we were talking about Toast and maybe the divergence that we're going to start to see with some of these companies that are basically kind of operating in the same place. The idea that this now becomes an individual story. We should also point out just another headline here on DoorDash, Carol, that the president and COO, Christopher Payne, will retire.
Yeah, and also authorizing a repurchase of up to $750 million worth of shares. So, you know, we've seen this by a lot of companies, or a fair amount, it feels like, in terms of buybacks, continuing that trend.
Yeah, and absolutely. And then we go back to this idea here, I think, of sort of what pockets of the economy are holding up, guys, you know, and we know this is, and we talk about the rolling recession, but that really gets to the idea that there really are certain areas that are going to do well and certain areas that are going to fall short.
And some of these stocks like DoorDash, we thought maybe that was a pandemic stock, of course, performing really well in March of this year even, or 2022 rather, trying to get back some of those gains, ticking up higher and higher on this earnings news, Katie.
Well, to your point that this was a pandemic stock, it's one of those things that, you know, became a habit out of the pandemic. People like ordering food. People like staying in Airbnbs.
Do they?
They do.
Are you
Just
sure? That's a bold call.
Bold call, but looking at the DoorDash results, that seems to be the case. And it fits in well with what we heard from Uber last week. Also, their food delivery service did really well.
Yeah. Let's not forget, too, DoorDash, like, you know, broadening out. It's not just about restaurant delivery. They've been doing other services like grocery and alcohol, and it looks like their marketplace numbers and forecast looks pretty optimistic.
And just real quickly, speaking of food, Texas Roadhouse reported, and I think it's interesting, they're actually saying they're going to raise menu prices in March.
That's not the Bloomin' Onion, is it?
That's Texas Roadhouse. You're thinking of Outback, which is a completely different company, Carol Masser.
You know, I was there last
I know you only eat at the Michelin-starred restaurants, but for those of us, you know, real salt-of-the-earth people, Texas Roadhouse
I've
and
had a
Bubba's
Bloomin'
33,
Onion, you know. I've had one. That's good stuff. I've even been to the Olive.
We'll have to take a team trip. We'll all go to Texas Roadhouse. It'll be nuts.
I think I'm off that day.
All right, that is a wrap. We got a bunch of stocks on the move. Redfin down about 3%. Got AMAT up about 2.6%, and Dash really off and running. All right, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We'll see you again, same time, same place tomorrow. in economic news, but a great way to feel what is going on in the global economy is to watch the money flows and the level of payment transactions around the world. And our next guest has that vantage point and recently reported earnings that resulted in some analysts actually raising their price targets on the company's shares. With us is Jeff Sloan, CEO of the $30 billion market cap and publicly traded Global Payments. He joins us via Zoom from Atlanta. Jeff, nice to have you here with Maddie and myself. How are you and how's business?
Well, thank you guys for having me. Business is good. As we said in our earnings call just under a week ago, we had a good fourth quarter. We had a very good January. I think you've seen some of that data from Bank of America, MasterCard, and the like. The consumer remains very healthy. We grew volumes in our business 9%. Constant currency for the fourth quarter. Our guide is for more of the same this coming year in 23, and we're starting off a really good base from January. So we're very pleased with where we are, and the consumer remains healthy.
Is the consumer remaining healthy despite some of these big macroeconomic headwinds? Are you worried about any upcoming Fed moves potentially changing your tone a little bit?
Well, we worry all the time, just to be candid, but we really haven't seen a significant impact yet. Where we have seen impact is really in selected geographies. So we called out our earnings call was in the United Kingdom, which I think is mostly macro, caused by Brexit as well as rates, of course, in Asia Pacific in selected markets, and that's largely around COVID kind of openings and closures and the like. We have seen some differential impact there, but we really have not here in the United States, which is 70% of the revenue and profit of the company. So it's not like calendar 22 was all easy from a rate point of view or an economic point of view. And our fourth quarter in particular of 22, I think reflected really the current economy, yet we had a very good fourth quarter and we had a really good January. So I think it does reflect for our major markets the current mix of the economy. And it would take a change adversely to kind of where we are today to have an impact to what we're guiding toward.
So the idea, Jeff, of a recession is not necessarily front and center for you?
We're certainly not seeing it today. So I would say we see more of a mix shift toward non-discretionary. You were just talking about restaurants, kind of a minute ago. So we certainly see a mix shift toward non-discretionary. Our restaurant channel, really at the enterprise quick service level. So I think Burger King, that type of thing, was up 20% year over year in the fourth quarter, really an all-time record for us. So in some of our other markets, like our e-commerce kind of online business, that was up 16%. Constant currency in the fourth quarter, that's really an acceleration versus where it was in the third quarter. So I think in certain markets, the business continues to zoom ahead. There probably is a bit of a mix shift on discretionary and non-discretionary. There certainly are geographic differences, but no, I would say broadly we haven't seen it yet, and we're expecting just kind of more of the same as we head into 23.
Hey, do me a favor, take a step back, because I want to make sure that, as you speak, our audience understands exactly the market you're playing. All B2B, B2C, a little bit of both?
Yeah, great question. So 3/4 of the company today serves small to mid-sized businesses, providing digital technologies to allow those businesses to accept digital payments globally. The vast majority of that, 70%, as I say, is in the United States, but we're physically present in 38 countries and cross-border in 200. So I think on 3/4 of the company, we have really broad exposure to what the consumer is doing worldwide, and we're really kind of everywhere the payment flows are in that business. The other 25% is really serving financial institutions and issuers of credit and debit cards, and there is a B2B element as to what we do. So there we're selling software and acceptance services into businesses that are paying other businesses or that are taking payments from other businesses. That business is growing, really like a weed. So we announced on the call last week that B2B business is up 30%, one of the businesses that we bought there. Our expectations for this year are into the double digits of continued growth for that. And I think we're benefiting there by drive toward efficiency, people not necessarily all returning to the office, an enormous underpenetrated market of like $125 trillion. So I think the trends are very good in our core businesses.
Right. But you are a great gut check. As you said, 3/4 of it is small businesses that you are playing with, business B2C. So you have a great gut check on the consumer. Consumers still do. I mean, we had strong retail sales data. We know that. But you're seeing a lot of it, I'm assuming, in fairly real time. Consumer continues to do okay.
That's exactly right. It's not as if gas prices weren't high 9 months ago. It's not as if there wasn't a war in Europe. It's not as if rates didn't start spiking in the summer and the fall. So, look, we've anniversaried, or we've absorbed a lot of those things. Yeah, we had a really good third quarter, really good fourth quarter, really good January, and gave a good guide, as you referenced in the intro. So, I think the consumer is hanging in there. Where we've seen pockets, it's really specific to geographies like the UK, but we haven't seen that broadly, and certainly not here in the United States.
Correct me if I'm wrong, Jeff, because one of the things that I worry about sometimes is that the people who are the new entrepreneurs who are going out and starting their own businesses for the first time, maybe those are people who've been laid off. Maybe those are people who are looking for a different revenue stream. Tell me I'm wrong, though. Is the consumer who is looking to become an entrepreneur actually doing financially okay?
Absolutely. So small to mid-sized business is really our core, especially for the first 3 quarters of the company.
Yeah.
That business has been booming. In fact, we had our best sales month for the year in December and our second best sales month ever in January. And we're selling to the small businesses, a lot of whom are startups, as you just referenced. So those businesses are extremely healthy. And as I mentioned a minute ago, we haven't really seen any dramatic change in the rate of business formation. I would also tell you that our retention among small businesses, which is a key measure of economic health, is as high today as it was in 2019 pre-pandemic. So we're very pleased about where it is.
Well, that means, right, small businesses aren't folding, which I'm assuming it was a little bit different in the pandemic.
Well, we certainly held our breath throughout pieces of 2020, waiting to see what was going to happen in April and May of 20. And to be honest, we didn't really see, I mean, obviously we worried about it, but we didn't see an enormous impact from that. As I mentioned a minute ago, our customer count was up, throughout the whole period. And our retention today, and really coming out of the pandemic, was as high as it was in 2019. So, look, it was obviously a very stressful period, but I think the PPP, helped and worked for that period. And there was a version of that in many of the countries that we're in. So sitting here today, the business remains extremely healthy.
Got to ask you, your stock, some speculation that a move higher recently was because of some activist speculation after a 13F filing. Anything you can say about that? Has anybody reached out and said, hey, we want you to be doing this, or tell us what you can?
Well, we have a good relationship with all of our shareholders, and we talk to all of them, all the time. So I don't think there's anything new, as it relates to some of the stuff you've seen more recently. If someone's got a better idea to do something, we're obviously happy to listen. And I'm a big shareholder myself, as are many of our employees. So I think at the end of the day, we welcome those ideas. I think the truth is, in the last year or so, we announced the sale of our NetSpend prepaid business, the sale of our gaming business, most recently the acquisition of one of our competitors, Evo Payments. We bought back 8% of the stock of the float last year and returned $3 billion of capital. So I think many of the things that we're already doing. And we added Silver Lake, the worldwide leader in tech investing, to our base of investors. So I think we're doing all the right things. If someone wants us to do more, we're certainly happy to listen.
All right, we're going to leave it on that note. Come back soon. Good take on the economy. Jeff Sloan, he's the CEO of the $30 billion market cap company. We're talking about global payments, joining us via Zoom from Atlanta. Got to say, I'm just watching some of the stocks in the aftermarket. Maddie Amat, Applied Materials, is up about 1.7% as we speak. And we've got Redfin, though, just down about 2/3 of 1%.
And we just got DraftKings results as well. It's up by about 1%. Still watching that.
All right, you are listening and watching Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. Lots of earnings after the close of trading, and we've got you covered. Right now, Applied Materials shares, they're up by 1.4%. Applied is the biggest maker of chip manufacturing equipment, and it gave a strong sales forecast for the current quarter, signaling that its ability to fill delayed orders is helping make up for weakening demand. DoorDash has forecast earnings that beat analyst expectations as cost-cutting efforts meet resilient consumer demand for pricey takeout. After hours now, we do have shares of DoorDash surging by roughly 9%. Visa says its CFO, Vasant Prabhu, is retiring. The latest change in the payment giant's executive ranks, that stock after hours down by about 1.3%. And DraftKings is reporting revenue for the fourth quarter that had beat the average analyst estimate. The Dow, the S&P, and NASDAQ all declined today. Stocks closing firmly in the red after two Fed officials said they are considering 50 basis point interest rate hikes to battle persistently high inflation. The 10-year now at 3.86%, with the 2-year 4.65%. Stocks finishing the day at session lows. S&P down 52, down 1.4%. The Dow down 431, down 1.3%. NASDAQ down 214, a drop of 1.8%. Gold up $1 the ounce to $18.37, up by about 0.1%. West Texas Intermediate crude down 0.5%, 78.13 a barrel. So again, recapping, we've got that 10-year at 3.86%, and the S&P's down 1.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, our next guest is an author, a television host, a philanthropist, a James Baird Award and Michelin star decorated chef. That, again, just also earning a 4-star rating from the New York Times. We'll talk about that in just a moment. He is definitely in a class all his own. We're talking about Eric Ripert, executive chef and co-owner of Le Bernardin, now celebrating its 50th anniversary. Le Bernardin, one of the rare New York City restaurants to be awarded the maximum 3 Michelin stars for excellence in cuisine. If there is like a benchmark and award, he has certainly won it. He's also vice chairman of the board of City Harvest. He joins us via Zoom in New York City. Eric, thank you so much. Thank you for coming on Bloomberg again. How are you?
I'm doing great. Thank you for having me today.
Congratulations. We're not quite sure where to start, but let's start first of all, because you were kind enough in the midst of the deep depths of the pandemic to come on and talk with us about the industry. Tell us where we are today and how much we've come back, how much we have to go.
So the industry came back very quickly. People, right after the pandemic, decided that they wanted to splurge and have a great experience and live life and be happy, and therefore restaurants and the hospitality in general are benefiting from that shift of thinking. And despite the fact that last year we started the year with the Omicron, and it was a bit of fear attached to that, restaurants did extremely well in general in New York City and all over the U.S.
And no signs of stopping?
No, I don't see any stops of stopping. The big difference in between last year and this year is that more people are going out, but the spending is a bit less than 2022.
Where are you seeing that?
Well, the spending is, at least at Le Bernardin, the spending is less in the wine consumption or in the cocktails. People have the tendency to be saving a bit more there. We have a prefix menu or tasting menu, so people cannot eat something less expensive because, again, it's already decided. But for the wine consumption, for sure, we see a huge difference. And when I talk to my friends in the industry, they observe exactly the same phenomenon.
So I wonder, too, how much, Eric, is because of still the inflationary and price pressures, how that is playing into kind of your dynamic.
So we have seen a lot of inflation in 2022. We still see some inflation as we speak right now. It's difficult to really quantify the effect, but we had to raise our prices by 20% in a period of time of 18 months. And right now, depending of the weather and depending of many components, the price of many products and produce varies.
And I know during the pandemic, from the New York Times rave review, which we'll get to, but you had 7 people working with you in the kitchen. Is that correct? So I imagine you've got a lot more now, but talk to me about what that transition kind of back to quote unquote normal has looked like for you, and how have labor costs changed for you?
So it was very difficult to reopen the restaurants because a lot of people that were working in our industry went back to other states that were open to business, like Florida, for instance, or young students that are usually learning in a kitchen of fine dining restaurants went back to their families and never came back to New York. So when we reopened the restaurant, the management was here. They were employees that work at Le Bernardin for a long time. And we were short in staff, but we reopened, as you remember, at 25% capacity in New York City. Right. And then it increased to 50%, and then we closed again, and then we reopened finally at 100%. Today, from 7 people in a kitchen that we have 60 cooks. We should be about 75 cooks.
Wow.
Or chefs. And we are a little bit short. The salaries are, in general, much better than what they were pre-COVID, because again, it's a shortage of labor in the kitchen and in the dining room as well. And therefore, it has a huge impact on the budget of the restaurant.
Yeah.
And some of the inflation is passed to the consumer, and some of it is absorbed by the owners of restaurants.
And I know that you differ from Noma in Copenhagen, which is a restaurant that does not. They have unpaid interns, and I know that you pay everyone on your staff. Talk to me about where you're able to increase costs the most easily for customers in order to maintain the profits that you need to run the business.
Well, the prefix that was pre-COVID was 20% less than today. We also increased drastically because we were very inexpensive for lunch. But today people understand again that the price of goods has changed, and we do not have people questioning the price of our menus. The price of the wine is basically the same, and people have a lot of choice. We have about 1,000 bottles, different wines at Le Bernardin, and people can choose inexpensive, fair, or exceptional price, of course.
Hey, Eric, we had Danielle Boulou on back in December, and, I do recall, I want to go back to what you said about workers and some of them leaving. They went to Florida, and that was one of the things he said. I think labor was a really tough issue for him as well, and just this whole idea that workers who were in the industry have left. They haven't come back, and they've found jobs elsewhere, and so that continues to be a real chronic problem.
It is a big problem, especially for fine dining restaurants, because usually we, again, have a lot of students who come from culinary schools, or people who are starting their career, and they want to go into fine dining because it's where they learn the basics, and it will give them huge opportunities in their future. Those young people make a big sacrifice to live in New York City. Usually they have roommates, they live not necessarily in Manhattan, and when COVID happened, they left, and they didn't come back to New York because the lifestyle is too expensive, and they find those other jobs in other places.
Do you ever think about, or do you, and you and the industry at whole, think about, it's something that's come up with Fed speakers, it's come up with certainly politicians, this whole idea of immigration and opening up the borders more a little bit. And just got about 30 seconds, and then we'll come back and continue the conversation.
We would love that, of course. We would love to have more immigrants, legal immigrants, coming and helping us in the kitchens because they stay with us for a long time.
All right, we're going to continue the conversation. Delighted to have with us Eric Repair, of course, of Le Bernardin, as we said, celebrating its 50th anniversary and just again earned a 4-star rating from the New York Times. The review is pretty incredible, and we're going to talk about it with Eric in just a moment. You are listening and watching Bloomberg Business Week, brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Thousands of small businesses benefited from a payroll tax refund and beat the odds of shutting down their organizations. This refund is not a loan and could help your business weather rising inflation and supply chain issues. Learn more at getrefunds.com. You've eaten at their restaurant, haven't you?
I have. I was very lucky to eat there one time, and it was amazing.
It's just
amazing doesn't cover it.
It's on a whole other level, and this is something that the New York Times gets into. As we said, it is not often for a New York City restaurant to get that 4-star rating from the New York Times, and they've done it more than once. So we're going to get back to Eric Repair in just a moment. You are listening and watching Bloomberg Business Week on this Thursday. Carol Masser along with Madison Mills. A lot going on around the world, as you know. So for an update, let's head to D.C., our 99.1 newsroom in the nation's capital, and our own Nancy Lyons. Hey, Nance.
Thanks, Carol. President Biden has been giving a more thorough account of the recent downing of 3 unidentified objects.
We don't yet know exactly what these 3 objects were, but nothing right now suggests they were related to China's spy balloon program or that they were surveillance vehicles from any other country.
Biden says he has requested that officials set up a better way to keep track of the inventory of objects in the skies, and he's also directed National Security Advisor Jake Sullivan to lead an interagency team to review U.S. procedures and to create global norms for such incidents. Well, we're learning more about a Georgia grand jury that's been investigating 2020 election interference. Bloomberg Washington correspondent Joe Matthew has more about a report that was released today.
Only portions of the report were released, showing a majority of the grand jury believes perjury may have been committed by one or more witnesses testifying in this case. They did not name names, but they could include some big ones. Trump lawyers Rudy Giuliani and John Eastman both testified, as did Senator Lindsey Graham and Georgia Governor Brian Kemp.
Bloomberg's Joe Matthews says now the Fulton County District Attorney will need to decide whether to present the case to a regular grand jury, which could recommend indictments. Environmental activist Aaron Brockovich says President Biden is not doing enough to reassure the people in East Palestine, Ohio, after that recent train derailment that released chemicals into the air and water.
Their lips are turning blue, their tongues are tingling, their sore throats, projectile vomiting, their cats are dead, the birds are dead, the fish are dead. What is happening out there? I have never seen anything like this in my entire career.
Aaron Brockovich says the EPA needs to do more. The train derailed February 3rd, and authorities decided to burn off some of the chemicals instead of risking an explosion. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:41 on Wall Street. I'm Charlie Pellet. We check the markets all day long here on Bloomberg, and we begin with a developing story. This headline now from the Bloomberg Professional Service. The SEC is poised to sue the company behind the failed Terra USD stablecoin. So that's a story developing right now. The Dow, the S&P, NASDAQ all declined today. We'll get to the numbers in a moment, but lots of earnings after the closing bell today. Among them, DoorDash. DoorDash delivered for investors today as its forecast earnings that beat analyst expectations as cost-cutting efforts meet resilient consumer demand for pricey takeout. DoorDash, after hours, up by 5.5%. AMAT, Applied Materials, it is the biggest maker of chip manufacturing equipment, and it gave a strong sales forecast for the current quarter. Shares after hours of Applied Materials up by just about 1.2%. GM CEO Mary Barra says demand for expensive trucks remains strong, enabling the company to fund a blitz in electric vehicles that begins this year. And in an interview right here on Bloomberg Radio, she also talked about cost reductions at GM.
Through COVID, we found we could take cost out, reduce bureaucracy, and now we've got to continue to get at that. And that's why we announced with earnings, even though it was record earnings, we announced that and committed to take $2 billion out of structural cost between 23 and 24. And I know the team can do it.
S&P 500 index today down 1.4%. We did close at session lows. The Dow was down 431, down 1.3%. And NASDAQ today down 214, drop there of 1.8%. So stocks closing firmly in the red after two Fed officials said they were considering 50 basis point interest rate hikes. The 10-year now at 3.86%, with the 2-year at 4.64%. Ken Van Leeuwen is the CEO of Van Leeuwen & Company, and right here on Bloomberg Business Week, he told us remarks from Cleveland Fed President Loretta Mester and St. Louis Fed President, the president of the St. Louis Fed also rattled investors today.
Bullard came out and said that basically he thinks in March that we're going to have to raise again by another 0.5 point rather than these quarter-point hikes that we just went through. So again, the Fed has its mandate to control inflation, and it looks like they're going to be doing that. So that's what's pushing rates up, of course, and the markets down.
And again, 10-year at 3.86%. Spot gold at $18.36 the ounce. West Texas Intermediate crude down 0.7. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So let me read you something. A great restaurant can be a sort of cultural preserve, a place where rare skills are passed on from one pair of hands to the next. Even formal restaurant service is built on careful study of human behavior if it's done right. A restaurant like La Bernardin is run by people who know things that others haven't learned yet. This is part of what ran through my head, too, when I tasted those scallops and their cream sauce and thought, they kept it alive. Now, this is, of course, a New York Times review that gave La Bernardin 4 stars again, and I believe it's the 5th consecutive time that they have gotten this. With us, of course, as you know, is Eric Repair, executive chef, co-owner of La Bernardin, with us on the phone here, actually via Zoom in New York City. Eric, to hear that and to get this distinction again, how does it feel?
Well, it feels good because the New York Times is an institution, and Pete Wells is a tough food critic. To have 4 stars since the opening of Le Bernardin, which is since 1986, it's exceptional. We are the only restaurant in New York to have that record. And we celebrated for a few days the review, and now we are back to work and trying to create an amazing experience for the clients that come to Le Bernardin, and we are living the passion, we are living the dream.
I'm glad to hear that you celebrated at least a little bit, though. You deserve that and much more. I have to wonder, there's been a lot of bad press lately for these incredible restaurants, right? It feels like, I don't know if you've seen the movie The Menu. There's TV shows about being a Michelin chef and just how challenging it is. What do you think maybe is getting misunderstood about what hard work you do and the challenge and beauty of these Michelin star restaurants?
Well, fine dining restaurants are meant to create exceptional experiences for the clients. And people who work in those restaurants are very passionate and love the hospitality industry. Of course, in a kitchen is about craftsmanship, artistry. In a dining room is about loving to interact with clients. And we have a team of sommeliers that have a lot of expertise with the wines, and they have passion for discovering and testing great wines and sharing their passion for the clients. So this is what fine dining restaurants are meant for. Now, it's some restaurants that have good practices, like Le Bernardin, where every employee is paid with fair prices, fair salaries, where we pay also the overtimes and we have benefits for our employees, and where we treat all the employees with tremendous respect. And you have some other restaurants that are getting a bit of a bad press lately because they don't have the same standards as Le Bernardin.
Yeah, it speaks to culture, right? We talk about it's got to be from the bottom up, the top down. I want to ask you something. How does this process work? In other words, do you know when Pete Wells is going to come in? Does he walk in and are you all surprised? Walk us through. We've all seen it in movies, you know, when the critic comes into a restaurant. How does it actually work?
So Pete Wells is pretty well recognized in New York because he's the food critic of the New York Times for many, many years. I think he's there for 12 or 14 years. But you never know when he's going to show up. And what he does is send some friends first, and they have a fake name, and you sit them wherever you decide to sit his friends. Usually they're not necessarily the most well-dressed people in a dining room, and they're not necessarily well known by the team. So sometimes they end up in the back of the restaurant and not in the front. But then he shows up, and then they choose at the very last minute whatever they want to experience from the menu, and they have interaction with the staff and with the sommeliers again for the wines. So when Pete Wells arrives and is with his friends and decide to eat many dishes, it's basically too late, because if your fish is not fresh, your sauce are not good, it's nothing you can do. It's too late. You can't redo everything.
Do you, Carol mentioned some of these movies, and one of them, they say that the critic comes and drops a fork on the ground to see how the staff reacts, and that's a tell that it's a critic in the restaurant. Is any of that true?
I have seen that with few critics, yes. Yes, it's sometimes they drop the napkin on purpose, or a fork or something like that, or they make a mistake, and or sometimes, like the other day, for instance, Pete Wells wanted to have the dessert, and when we were about to serve the dessert, they decided to have cheese at the same time. So we had to coordinate bringing the cheese cart, cutting the cheese, and serving it at the same time as the desserts that were coming from the pastry. So that's the way they do to basically test the quality of the service.
Wow. All right, Eric, just got about 30 seconds. What are you having for dinner tonight?
Tonight for dinner, I'm going to test the sauce. I'm going to test the food without double dipping. And that will be my dinner, because I eat only once a day for lunch.
All right. Oh, wow. That's so interesting, all of it. And just such a joy to spend this time with you. And congratulations, because the distinction, as we said, getting that 4-star rating from the New York Times again is just, and subsequently getting it for several years here, is just really remarkable. Eric, thank you so much. Be well. Eric Repair, executive chef, co-owner of Le Bernardin, as we mentioned, celebrating its 50th anniversary. I believe the first time he got a 4-star rating was back when he was 29 years old in 1995, but again, getting it for the 5th consecutive time. So really remarkable, right?
A huge accomplishment. That's
I love
very
that
difficult.
story.
I know. So good. Such a good chat.
You're listening to Bloomberg Business Week. Carol Mass Ambassador Madison Mills. This is Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
It is 4:53 on Wall Street, and from Bloomberg World Headquarters, I'm Charlie Pellet. Applied Materials shares higher after ours. They have paired after our gains, now up by 1.4%. Applied is the biggest maker of chip manufacturing equipment. It gave a strong sales forecast for the current quarter. GM CEO Mary Barra says GM is seeing strong vehicle prices across the board. Also says EVs can have better profits than today's cars. And in an interview with Bloomberg Radio, she also discussed the demand for its EVs.
Well, so far, our Hummer, our GMC Hummer EV is sold out. In fact, we're not even taking orders. I can't wait till I can turn that order bank on again. The Lyric is doing well. By the end of first quarter, we'll have, we believe, delivered our first year limited edition and begin taking orders for the second model year. And we've seen really strong interest there.
Among the companies out with earnings this morning, Hyatt Hotels, which sees revenue per available room this year up 10 to 15%. Mark Hoplamajian is the president and CEO.
January has started off very strong. So we're seeing great demand across leisure, which shows no signs of weakness. And that's globally, including China, which had a record Lunar New Year travel volume. And then group business among corporations and associations is looking very, very strong.
And Hyatt shares today down 0.2%. Those are some of the company's stories. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
You are listening and watching Bloomberg Business Week. Carol Masser, Madison Mills, though, in for Tim on this Thursday. Right now, let's get a check on world and national news. Off to D.C., 99.1 Newsroom, and Nancy Lyons.
Thanks, Carol. President Biden says he intends to speak with his counterpart, Chinese President Xi Jinping, to diffuse tensions over the U.S. military downing of an alleged Chinese spy balloon.
This episode underscores the importance of maintaining open lines of communication between our diplomats and our military professionals. Our diplomats will be engaging further, and I will remain in communication with President Xi.
Biden says the U.S. seeks competition with China, not conflict. He also says there's no evidence 3 other unidentified objects recently shot down were involved in surveillance. Parts of the grand jury report into former President Donald Trump's alleged efforts to overturn the 2020 election results in Georgia have been released. We get details from Bloomberg's Nathan Hager.
The excerpts include the introduction and conclusion to the report and a section where the jurors express concern that some witnesses may have lied under oath. The grand jury recommends that Fulton County District Attorney Fani Willis seek perjury charges, but the excerpts don't say who the witnesses are, nor do they reveal any other charging recommendations. Superior Court Judge Robert McBurney ordered all those details to remain under seal to protect the witnesses' right to due process. In Washington, I'm Nathan Hager, Bloomberg Radio.
Michigan officials say the 5 students injured in a campus shooting at Michigan State University remain in critical condition, but they are improving. 3 other students were killed. MSU's interim police chief Chris Rosman says the shooter had 2 handguns on him and additional ammunition.
We can also confirm that a note was found on the shooter, and the location that the shooter was located was roughly 3.8 miles northwest of campus.
Chief Rosman did not reveal what was in that note. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Carol and Madison.
All right, Nance, thank you so much. Bloomberg Business Week brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. The ERC isn't alone. It's money your small to medium-sized business may be eligible to receive for keeping employees on payrolls in 2020 and 2021. Get an estimate of your company's potential refund today. Learn more at getrefunds.com. All right, let's get more on what's going on in and around the nation's capital. The host of Sound On, Joe Matthew, joining Maddie and myself. You talking balloons at all?
Yeah, though I'd rather hear more from Eric Repair. You don't want to talk more about it. Are you kidding me? What are you?
Wasn't that a great story about like when the New York Times
Absolutely.
review? Anyway.
And he's just the coolest guy. Cheers to you guys. What a great conversation. We are going to talk about balloons here or not balloons. We still don't know what these other 3 were.
What's up with that?
And if you ask some on Capitol Hill, namely the senator from Louisiana, John Kennedy, he will tell you that we actually cannot find them, which is different than we're having trouble getting to them. He says we don't even know where they are, at least with any specific nature, because of the terrain, the weather, all this stuff. So it could be a long time before we know what those were.
So, Joe, what is your big question to lawmakers following those remarks from Biden?
Well, actually, we're going to have Mike Rogers coming on in just a moment, the former congressman who chaired the House Intelligence Committee, to find out just what it is, first of all, that we learned today, because he talked a lot more about creating protocols and how to deal with these kind of things. But, you know, we're still, if we still don't know what those are we going to continue shooting them down? We have a lot of things to figure out.
Yes, indeed. And we talked to a former lieutenant general of the U.S. Air Force, Joe, and I'm just going to say...
You had General Deptula on, I believe, right?
We did. You know him well.
He's fantastic, absolutely.
Oh, my God, blown away. But he said, you know, we got to do some more spending in terms of aerospace defense. So
just when Republicans in this new House majority are calling for cuts, that's where the argument's going to begin.
I love it. You've got lots to talk about. All right, Joe, thank you so much. Joe Matthew, incredible Joe Matthew, the host of Sound On, coming up in just a few minutes. What a great day.
What a great day. And I